would be half of what it historically has been. And that is a critical component. Thanks for joining me on the Comstock channel. I'm Senior Analyst Brian Grete, and I want to run through EPA's decision on its proposals for the reallocation of small refinery exemptions from earlier in the week. And really, EPA put this proposal out there with several options. And basically what it does is it continues to pit big agriculture versus big oil. And so we have a clash of two superior titans within the U.S. economy, and especially within agriculture and energy sectors. They continue to battle over this one. And instead of EPA just coming with a final decision, it is opening up for comments from both sides. And this is clear. Big ag is going to be for 100% reallocation, and big oil will be for something less than that. And so we'll see how this all ends up when it is all said and done. But EPA has put it out there through proposals to get these two sides to continue to clash and see where we end up. Now, I want to run through the proposals first off. EPA has two main or primary focuses with the proposal. One is 100% reallocation of the small refinery exemptions, or SREs as I'll refer to them, as that it issued in late August for the 2023 through 2025 years. And so those are significant gallons. And the first proposal is 100% reallocation of those. So it would take what it exempted from the small refineries and put those on the shoulders of larger refineries to make up the difference. And so you would have no reduction whatsoever when all said and done. It would be a net zero. The other main proposal is a 50% reallocation. So it would take half of what of those SREs that were granted and now put them on to the bigger refineries to cover the difference there. And so the two primaries are a full 100% or a half 50% reallocation there. Now, EPA did not limit it to just those two proposals. Those are its two primary focuses, but it will hear comments on everything between 100% and zero. So other options on the table, I suppose you could say, are 75% reallocation, 25% reallocation, and absolutely zero reallocation. And as you can see here, the two primaries, 100% reallocation and 50% reallocation, would give us these numbers. So this is what we're looking at for 2026 and 2027. This chart was provided by EPA, and so these would be the numbers that they are looking at for those 2 years in terms of a reallocation process. And you can see it's not quite exactly double or half, depending on which way you want to look at it, with the 100% and the 50%, but those numbers are very close, and it breaks it down all the way from cellulosic biofuel down through total renewables. And the advanced there, that's a key one. The biomass-based diesel is critical for oil, and the advanced and total renewables, obviously, for the corn-based ethanol. And these are critical ones, not only for the corn market in terms of demand and how much of that demand is made up for with the lost reallocation gallons, but also for the soy oil market. And so both of those are tracking this very closely. Here's kind of a chart I put together in terms of what we're looking at based on the industry. So agriculture, what are the biofuels and farm sectors looking for? Well, they want full reallocation. They want the 100%, obviously. That would give us back the demand that was quote unquote lost because of the SREs. And so that is what they want. But they want certainty. It would provide more certainty on the demand side of things. It would provide demand growth. And so obviously that is what the farm and biofuel sector wants. What do they fear? Well, they fear a reduction, something less than 100%, whether it be 75%, 50%, 25%. Absolute worst case scenario would be zero reallocation of those SREs. On the flip side, the refiners and oil industry, so big oil as I referred to them, they're looking for just predictability. How many gallons that they will have to cover as their obligations for the biofuels blending obligation. And so that's their critical one. They fear higher compliance costs and everything else that is associated with going into the renewable identification or RIN market and having to purchase anything that they come short of on their actual obligations. And so those are tradable, those RINs. And if they don't meet it in the production side, they have to go and purchase them to cover their shortfalls. And they want predictability, they want certainty, and they fear higher costs in compliance with those. And now politicians are involved as well. So we've got the farm state lawmakers, obviously, they're going to fall on the farmer and biofuel side of things. And then we have the energy side, and they're going to fall on the refineries and oil companies side of things. And so this not only pits two very big and bold industries against each other, agriculture versus big oil, but it also pits the lawmakers that represent those states in this. And so it's a critical one. Now, the other thing that EPA's proposal had was a 50% haircut for foreign-based feedstocks coming in to produce biofuels. And so the credit that they would get for using foreign-based would be half of what it historically has been. And that is a critical component. EPA is taking public comments on the SRE reallocations through October 31st. And so it will take into account all the comments that come in, both on the agriculture and biofuel side of things and on the oil and refinery side of things. And it will come to a final judgment there with its final proposed rule. On the 50% haircut, it has already closed that comment period, EPA has, and it is in the final decision-making process. So you cannot comment on that, but you can comment. So I encourage you to contact your lawmakers, make your voice heard, and let it be known that 100% reallocation is what you want, assuming you're on the farm side of things and the biofuel side of things. Big oil obviously is going to go for zero and something less than 100%. And so we'll see where it comes. But once again, a clash of two titans that's created by EPA's proposal system. For the Comstock Channel, I'm Senior Analyst Brian Grete.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.